What's up guys, welcome back to this YouTube video. It's going to be a quick video on CPI trading. Please like and subscribe. I'm also going to do a few of my strategies from my previous videos, so please go look at those videos if you don't understand, but I'll quickly go through it again so that you hopefully catch it. But let's do the CPI trade and then how to catch the New York Open trade just after that. Okay, so as you guys know, previous video, you guys can go look at it. I'm going to mark out the high of the London session over there. So I take it from 10 o'clock South African time until 1 o'clock South African time for the London session, which is those two parts over there. So it will be that low there and that high there. That is, according to my strategy, the high and the low of the London session. Alright, so you guys will see that we are moving at a downwards movement, making lower lows, which is indicating that we are in a bearish movement. That's just something that you need to look at extra. But let's quickly look at the CPI trade, which is this 15-minute candle over there, guys. That's the CPI trade. So now we can see it broke out of the low of the London session, came back up to retest that low and also the order block over here, which will be indicating our sell entry for CPI. Sometimes these types of news trades doesn't have a very clear entry, and that's when you need to stay out. But when it breaks out of this London session low, comes up to retest that order block with that type of rejection wick candle, and also the fact that you can see this low as a break of a low, just a normal low, because there's a ton of rejection over there. Especially if you go into the smaller time frames, you'll see a bunch of rejections. It broke through the low, came up to grab the liquidity out of that order block for the sell down over here. Where would you grab TP? Take the high of the London session until the low of the London session, place it at your entry point, and you can take TP over there. You can also take your Fibonacci and you can then put it over there and move it down there like that for your TP 1, 2, and 3. So basically the same thing, but just with a TP 1, 2, and 3. So there's a bunch of ways to do TPs, and then also another third way is to mark out these order blocks on the higher time frames. So you can take it until that order block over there, or that opposite candle over there. Alright, so that's how you grab the CPI trade. Mark out the London lows and highs on the 15-minute and wait for a rejection from the top or from the bottom. And also just make sure that there's an order block candle in that low or high area where you want to take the trade. Okay, so New York Open or opening bell was this candle over here. So now we're going to wait for a break of a low and a high and a closure below or above it. Okay, so our lowest point is this one over here. So as you guys can see, it did go through it, but it didn't close below it. It went up again, and our high is this one over here. Okay, so now you guys will then, after it breaks the high, we know we are looking at a bullish move. We then need to identify the order block, which is the opposite last candle before a trend, the opposite candle before a trend. So you guys can see opposite, and then also there is a nice fair value gap indicating that the wicks will go into that area as well. But there's your entry over there, and then your stop loss would be probably below this order block over here. I'll put it just below this red line over there. If you miss that trade, there's always, well, not always, but most of the times there will be another chance to catch this entry. Broke this high, came back down, hit this order block over here for another entry. Usually when news hits like this, a big movement down or up, NAS tends to go and close this fair value gap over here. So it's quite a safe TP to put it until there. This is a big fair value gap that it needs to go and fill. A lot of liquidity in here that it needs to fill. So this is a nice TP to 2000 pips. So this risk to reward in this trade is basically, let's say you took this one, is basically 11 to 1 plus minus, which is a great trade. So yes guys, that's how you trade CPI and the NAS on NAS and then also New York Open. So guys, if you like this video, please like and subscribe and leave a comment if you saw something I didn't, or if you like the strategy, but let me know. Cool, enjoy your trading.